Also, refinancing can work as well if you want to pay off some debt early. So maybe you've racked up a little bit of credit cards, or you want to pay off a car or some student debt. We can refinance and pay that off as well, so you're not waiting for your home to sell to pay off that kind of stuff.
And if you're able to lock in those rates 120 days in advance, like in terms of like today's mortgage rates, like how much could you be saving if you get that done earlier?
Well, it really depends. I mean, we don't have the crystal ball, unfortunately, on rates, but what we're going to do is fight to get you the lowest rate in that time period, and a lot can change in 4 months.
All right, so welcome back to my channel. Today, we are going to interview Samantha, a mortgage broker in London, Ontario. So Samantha, can you just give us a quick breakdown of who you are and what you do?
Yeah, my name's Sam, and I'm a mortgage agent here in London. I work with Real Mortgage Associates, and we work with over 35 different lenders and banks to secure people financing on their homes or rental properties. Yeah.
Okay, awesome. Okay, so in today's discussion, we're going to talk about some questions and concerns that some of my clients might have and some of you guys might have in terms of new construction and pre-construction. So we're going to start off with the first question. Okay, so the first question we're going to cover is how your pre-approval can change on a new build versus an existing home. Samantha, can you help us break that down and tell us what happens during that process?
Yeah, so you definitely want to get your pre-approval checked. If you've not gotten a pre-approval, you want to get a pre-approval. If you've already gotten a pre-approval, you may want to get it checked because in a new build process, the property taxes haven't been assessed yet. So what happens is a lender wants to use 1% of the purchase price, and that can really change debt servicing ratios for most people. So let's say average property taxes in London might be between $3,000 and $4,000, but if you're buying a $600,000 or $700,000 new build, the bank is going to use a 1%, so a $6,000 or $7,000 per year for property taxes for qualifying. So we definitely want to make sure that your pre-approval works for your new build just like it would for your pre-existing.
Gotcha. So it's just really important to check the numbers ahead of time so that these extra costs, it may be like $7,000 to $10,000 more than you expected, right?
Exactly.
Right.
Yeah,
so
exactly.
It is okay. So it is important. I mean, in the large scheme of things, it might not be a big number, but it might hurt your pre-approval, right?
Absolutely. We see it all the time where people said that they were pre-approved up to $700,000, but maybe the bank or mortgage agent was using a much less property tax value than what a new build might qualify for. Also depends if you're buying a condo. So there's usually a condo fee associated with buying condos. Doesn't matter if they're new or old. We want to make sure that we've qualified you for that condo as well.
And just like from your experience, like if you don't kind of take that into consideration and there's an extra like $10,000, in terms of property taxes, how much can that hurt your pre-approval?
Can totally kill a deal. So we've had it before where, someone's gotten pre-approved by the bank and then they've gone and bought a new build. The lender's using 1%. Sometimes they'll allow the mill rate. So the mill rate is what each city kind of deems as their property tax amount. But it usually is a lot higher than what you're going to pay in your first couple years of owning your home. And what can happen is you end up having to put more down or needing a cosigner to go on the mortgage as well. So it's definitely something you want to get double checked. Gotcha.
So from that conversation, it's like it's better for you to do the homework to make sure you have the property taxes done right.
Exactly.
Otherwise, you might have to go to a co-lender. Or just, find out. It would be very difficult to get the deal done, right?
Exactly.
And this is just like a small step, like it's a homework for the buyers to do, but it can save yourself in the long run, right?
Absolutely. A lot of money saved, a lot of headaches saved if we can get the pre-approval solid.
Right, exactly. Then there's no like going back and forth trying to figure this out.
Exactly.
Gotcha.
Yeah.
All right, awesome. And our number 2 question is, so once you've bought a new construction, what's the process like from a mortgage perspective, kind of like maybe like a step-by-step process that you guys from the mortgage side have to deal with? What does that look like for you?
So what we want to do is about 120 days or 4 months prior to closing on your new build home, we want to lock in your rate. So we can do that. We can send it to whoever's got the best rates of the day. And what could happen is we're going to get a commitment letter out of that lender. And let's say the rates were to go down between then and closing, we can float down that rate. So you're always going to get the best rate between, those 4 months. After that, once we start approaching closing, we're going to be getting all of our documents to the lender. We're going to fulfill all the conditions on the lender's commitment letter. So once all those conditions are kind of fulfilled, usually one of the conditions is for an appraisal. And we're going to order an appraisal on the bank's behalf, or the bank's going to order it on their behalf. And basically, they're going to want to know that the property is 97% complete. So in a new build scenario, we really have to work closely with the builder to know when that date is. So it's kind of a joint effort when we're closing on one of these new builds. So definitely something you want to be working with the right partners and make sure that you're in good communication lines with everyone. And we can contact your builder as well and make sure that it is complete as we're approaching closing.
Gotcha. And I really like how you said like the communication aspect, because I think a lot of times in real estate, whatever you do, right, it's so important to have that team, especially like a good mortgage agent, a good real estate agent, kind of keeping that communication going, especially throughout the new build process, because it's such a long period, right?
That's right.
Like most of these builds are at least a year out. And then to keep that communication with your mortgage broker to see, okay, if I'm getting an appraisal done, when do I have to talk to the builders? When do I have to talk to the banks? I think that's really insightful for people. It's like, it's not, you don't just buy a new construction and leave it there and, it's going to close magically.
Right.
Like it does, from our conversation, it does take like communication to all of these different groups to kind of get the deal done.
That's right.
Right?
Yeah.
And if you're able to lock in those rates 120 days in advance, like in terms of like today's mortgage rates, like how much could you be saving if you get that done earlier?
Well, it really depends. I mean, we don't have the crystal ball, unfortunately, on rates, but what we're going to do is fight to get you the lowest rate in that time period. And a lot can change in 4 months. So we can switch lenders. We can also, the same lenders will usually fight for rates to keep your business. So what we do is, because we have so many lenders that we can choose from, we have the luxury of really fighting for rates, whereas opposed to just going to the bank, you're going to get their run-of-the-mill rate right at the bank. So that's kind of what we like to do for our clients. And we can talk about between fixed and variable, and at the time, what's the best scenario for you?
Awesome. So you guys have more flexibility in terms of like rates. You guys can shop around, right?
That's right.
It's not that rigid, just to kind of get the best rates for people.
That's right. Yeah. We deal with over 35 lenders, as I said, so we can definitely rate shop for you and go over, whether it's best to go with a fixed or a variable right now, and based on your situation. Everyone's kind of different. Mm-hmm. So that's kind of the luxury of working with an agent. Yeah,
I really like that, because like in today's market, rates change so quickly, right? Like from, would you say every 2 weeks, every 1 month? Like what's that?
Rates change every day.
Every day, right? Yeah.
Yeah, Bank of Canada sets our prime bank rates. So if you're looking at a variable, that's going to usually change quarterly. Mm-hmm. We just want to make sure that we're getting the best rate and the best package for you. Sometimes it's not always about rate for the client either. Maybe they want to attach lines of credit towards their mortgage, and certain banks offer different packages. So we just want to make sure you're getting the right fit and the right rate.
Gotcha. Yeah, that's really insightful. So obviously that communication, make sure you talk to somebody that's in the mortgage business every single day, that knows like the ins and outs and, the ups and downs, to get you guys the best rates, save them, as much money as possible.
Yeah.
Awesome. Okay, so now we're going to transition into something I think a lot of people are in. So especially in today's market, if you've owned a house for like anywhere from like 2 to 3 years, you've probably made at least $100,000 in equity. Right. So a lot of people are in the situation today where they're sitting on money.
Yeah.
Right. So
for sure.
Right. So the question is, if I don't have, let's say these are just like, this is equity that you've built up in the house. It's not cash in your hand, but it is there. Right. So the question is, if I don't have cash right now to purchase new construction or an investment property, but because my existing house has gone up in value because of the market today, what can I do to use that equity? Can I do anything with that?
Yeah, that's a really good question. So a lot of people are in this situation right now where they want to move, but they don't have the cash sitting aside, but they've gained all this equity, like you said. So there's a few different things we can do. One being a home equity line of credit. So if we don't want to touch the existing mortgage that's sitting on our home, We just kind of want to leave that be, whether it be because it's a higher penalty to break or we've got a really good interest rate there. Then we can attach what's called a home equity line of credit to the house. And that is enabling us to get some sort of money out up to a certain loan to value. So usually we'll require an appraisal on the property to see how much the property's gone up in value. And then we can, qualify you based on income and see how much of a home equity line you'd be approved for. So that usually is enough for people to get their down payment on a new build. What's nice about home equity lines is they tend to have no penalties to pay them off. So once you do want to sell your home and move into the new build, you're not going to pay a penalty on that second portion. The alternative is refinancing your home altogether. So maybe you're up for renewal soon, or you really just don't like your rate. We can look at a refinance option. We have terms from open to close 6 months to up to 10 years. So there's a lot of flexibility in refinancing these days. And we can kind of go over what may work for you with that. Refinance the home, get a whole new first mortgage. Also, refinancing can work as well if you want to pay off some debt early. So maybe you've racked up a little bit of credit cards, or you want to pay off a car or some student debt. We can refinance and pay that off as well, so you're not waiting for your home to sell to pay off that kind of stuff.
Gotcha.
And the third way we can do it is what's called a second mortgage. So similar to a HELOC where we don't have to touch the first mortgage that's there, a second mortgage is, tends to be an easier way to get funds, and it just taps into that new equity that you found. So yeah.
Awesome. So if you guys are in the situation where you've been at that place for a couple of years now, and you've seen your neighbors selling for crazy amounts of money, and you're like, hey, look, I really have some equity sitting there, I think it's a great just have that conversation with a mortgage broker just to see like what can you do with that, right?
Exactly.
From our conversation, there's so many different avenues you can take.
Yeah.
Depending on what your goals are, right?
Yeah.
So like if you wanted to take that money out to invest, whether you want to pay off some loans or you just want to get some extra cash, even for a vacation, right? Something like that. So I mean, just you have that money there, and you can do something with it. Don't think that that money is unattainable.
Exactly.
It's totally doable.
Totally doable.
And then they just kind of have to sit down with the mortgage broker, and then you guys will talk out the details, right?
Right. Exactly.
Yeah.
It's very simple. We can kind of get an idea of what the new value of your home is, and see what you qualify for.
Mm-hmm. So all they have to do is just an appraisal, like something like almost like getting a mortgage as well, right?
Yes.
So the paperwork and everything involved.
It's pretty much the exact same as if you were purchasing a new home. We're going to go through income. They're going to do an appraisal on your home. And basically we'll talk and figure out what you qualify for based on that income. Kind of give you an idea of what we could pay off and what you'd have extra if you'd like to use that money for other things. So. Gotcha.
Yeah. So let's say in a separate, let's say the income is not that high. They've been living at the house for a while.
Yeah.
But, the house has gone up like a lot.
Yeah.
But they don't have that income to support.
Yeah.
What are some options for those people?
So there's definitely a lot of options that us as agents have. There's the alternative financing world, which what we call the B market, tends to allow for better debt servicing ratios, more stretched debt servicing ratios. Also, we're seeing a lot of people that are self-employed, and maybe they don't have full history on their tax returns of income. We can do what's called a self-declared income program, which allows us to use the last 6 months of bank statements and kind of show what you've been making in income. So we're definitely using that program a lot for people right now. So there's definitely a lot of doors that open up when you work with an agent, as opposed to just, sometimes to your bank. But yeah, we can definitely look at your scenario and see how we might be able to help with getting you the funds that you need.
Mm-hmm. Gotcha. Yeah. So it sounds like you don't always have to go to the banks, right? Because the banks are sometimes really, stringent in terms of their rules, what can happen, what can't happen.
Yeah.
There are options, and you just have to kind of ask people.
Exactly.
And see what we can do,
yeah.
right? Awesome.
Yeah. And the bank has, their box of programs, and what's nice about us is we can definitely get that broader. So
awesome. Yeah. Great. Yeah, that's great. I mean, people have options,
Exactly.
You got to understand that you have options. You just got to ask, what can I do in my situation?
Yeah.
Right. And everybody is different.
Yeah.
So awesome. Okay. So the fourth question is disaster cases. What are some things that you've experienced in the past that have gone wrong, that you think that the audience can take some, insight on?
Yeah, so I mean, typically a new build takes a year, so a lot can happen in a year. We've seen new builds take over a year just due to COVID. So we recently had a problem with clients that were pre-approved by a bank and lost their job throughout waiting for the new build to be finished, unfortunately. So they were first-time home buyers on a new build condo, and so they were only putting 5% down. So the window of lenders that are available with 5% down is very slim. So what happened was, because this build had actually taken so long to do, the appraised value was a lot higher than what they had purchased the property for, which was definitely a blessing for them. So they came to us kind of at the last minute, and what we did was secured some private financing for them of the new appraised value, and we were able to secure that for 1 year, and the client's been able to secure a new job, and they're no longer on probation, so we'll be refinancing them this spring with a bank. So it was definitely, private financing can cost a little bit more, but it was a way for them to get out of like otherwise bad scenario that the bank couldn't help out on, and we're going to get them back to that bank within a few more months, actually. So yeah.
And you said that private financing is more expensive. Like, how much more are we talking here in terms of
rates? Can kind of definitely vary depending. They're typically equity lenders, so it depends on how much equity is there. So I mean, you can get private financing anywhere between 5 and upwards of 10%. The difference with private financing is it's very temporary. So usually terms are only like 6 months to a year. And what we want to do is get people in and out of private financing as quickly as possible. Typically, there's lender fees associated with private financing, and you're paying the legal fees on both sides, and that's what tends to be a little bit more costly. So whereas your typical mortgage, you wouldn't have lender fees if you're looking at A-prime lending. You're going to pay some lender fees for this, and obviously higher interest rate. What's nice about private financing, though, is we're not locked in as the same as a bank mortgage typically. So we can usually pay off that mortgage within 6 months to a year. You're not going to pay any penalty, or it's going to be drastically reduced. So
Gotcha.
that's the nice part. It's a little bit more flexible, and it's there if we need it.
Yeah.
So it's kind of our last resort if we need it. Yeah.
So like, obviously these people, maybe would you say they haven't really done the homework ahead of time, and that's why they're in that situation?
Yeah, it was kind of unfortunate. They went to the bank, and when you're dealing with 5% down, things can get very tight very quickly in terms of debt servicing ratios, because there is only the insured mortgage that's open to us at that point. So the rules are much more strict, and it just was an unfortunate, thing with COVID that he had lost his job and he was searching for a new one, and problem being that he just hadn't found his new job yet. He was like, within a month he was going to be starting. Well, the bank didn't allow that. We couldn't extend closing any further, so we had to secure some sort of financing right now, and this just kind of worked out for the clients. So yeah.
Gotcha. Yeah, I mean, that's great. I mean, even in that situation where that's really tough, right? You lose your income, a lot of things are happening, they can still get the deal done. Exactly. It may cost a little bit more, but if we look at the market today, like, things appreciate so much in the large scheme of things. It's not that much, right?
Exactly.
We're talking 1 year of maybe like close to 10% of interest rates, but then you can bring it back down once everything kind of calms down and everything's sorted out, right?
And the way to think about it is, if we didn't secure the private financing, these clients would have lost all of that equity. So when you kind of weigh the numbers, it worked out. They had gained so much more equity by holding this new build for a year and a half. They had gained so much equity regardless. So they were definitely happy.
Yeah, 100%. So exactly, like, you might be paying more to just get the deal done, but in the end of the day, you have the deal, you have the house, and you're in the market, right? Exactly. That's the biggest thing, right? Exactly. Just to be in the market, ride the appreciation to, eventually do whatever you want. Right. Exactly. So that's really, really good that you can like just help your clients get everything sorted out. And honestly, that's like solving tough issues. that if you went to a bank, maybe they couldn't do, right?
Exactly. Yeah, the bank basically told them that they couldn't help. So, and we see this a lot. You know, the banks have their certain, as we were talking, there's certain windows of what they're able to do, and that's why it's worth working with an agent, because we definitely have more doors open to us. So.
Gotcha. Yeah. Again, it's just the amount of different avenues you can take compared to a bank.
Exactly.
That's where you guys can provide the value to people, right?
Exactly.
Awesome.
Yeah.
Awesome. Well, I think most of the audience would agree that they don't want to be in those situations, which is why these conversations are so important to have. With that being said, thank you, Samantha, for the informative conversation. I definitely learned a lot. I will definitely link some links below to Samantha if you guys want to get in contact with her to ask any questions about mortgages, or just if you have some equity set aside. This is the time to kind of reach out to say, hey, I have some equity set aside. I want to do something with it. What are my options?
That's right. Yeah.
And Samantha, do you have anything you want to say before we go?
Just reach out to us if you'd like to, refinance. If you're looking at purchasing, we can definitely get that paperwork started for you, get your pre-approval kind of in. We work very virtually these days. So mortgage apps are all online. It's a very simple process. So totally reach out, and look forward to working with you.
Awesome. Again, just reach out. We'll have the conversation with you. We'll work out what we can do. What are your options? And hopefully we can get a deal done. Yeah.
Yeah. Perfect.
Awesome. Thank you so much.
Yes.
Yeah. Take care.